Good afternoon, everyone. Thanks for taking time to attend today's presentation. I am Diana Murray with ASAP Accounting and Payroll, and today we're going to talk about various aspects of unemployment insurance and unemployment claims. And so in terms of our topic today, unemployment benefits are, really a lifeline for employees, but understanding the ins and outs of unemployment insurance and unemployment claims can really be a rocky topic for small businesses. Changing unemployment rates, seasonal workers, new laws, and more lead us employers kind of scrambling to stay up to date. So that is our topic for today. And before I dive in here, I want to tell you a little bit about ASAP, as we are the ones sponsoring today's webinar. ASAP Accounting and Payroll started in 1990 in Telluride, Colorado. And our goal is to streamline processes, eliminate the hassles of bookkeeping, and mitigate risk, and really so we can get you to spending more time doing what you love. And at ASAP, ASAP for us stands for as simple as possible. We actually got started in Telluride, but we have 3 regional offices in Colorado, Durango, Denver, and then our home office in Telluride. And we service businesses not only across Colorado, but across the United States. And really to kind of put it into perspective, in 2018, ASAP serviced over 900 businesses, and we remit on average $54 million in payroll taxes and over $2.75 million in sales tax for our accounting clients. So I like to call us small but mighty. So thanks to everyone for joining in today, and we've got a heavy topic and a lot to cover. And with that, there's a little picture of myself. You just saw my face on the screen. I am a real person. I am the Vice President of Operations at ASAP, and I've been here for 12 years this June. So, and then I also have with us today Michael Santo from Bechtel Santo Severn. And I will do a formal introduction today when we get into his portion of the presentation. So with that, let's go ahead and get started. So really the first part of this presentation, I'm actually going to cover some basics here, and hopefully I don't go too fast. But I'm going to kind of cover a little bit about unemployment insurance and rates in particular. And that will kind of set the stage for Michael Santo to dive in, and he will be talking about seasonal unemployment insurance and claims and how to win those claims. So I'm really excited to try and give most of the time to him. But before we do that, I want to dive into some basics. So in terms of unemployment insurance and who is liable, an employer is liable for unemployment insurance if one or more of certain requirements are met. So the list actually on the Colorado Department of Labor and Employment is rather lengthy, but I've outlined here on this slide the most common areas in terms of the small businesses that we work with. And most of you on this call are liable for unemployment insurance, so I'm actually not going to go into each bullet point here. But essentially, employers that paid wages of at least $1,500, that's $1,500 in a calendar quarter in a current or prior year, or they employ at least one employee for 20 weeks during the current or prior year, are subject to unemployment insurance. And as you guys know, most of you on this call are liable for that. So again, I'm not going to spend too much time here. But the next slide, I want to talk a little bit about who's exempt from unemployment insurance. So I do want to spend a little bit of time to go over each bullet point, because it does come up as frequently asked questions in our world. And whether you're a large employer, whether you're on the board of a nonprofit, it's good to understand some of these exemptions. So an employer is exempt if they are a charitable nonprofit organization who meets the federal 501c3 guidelines and employs less than 4 employees. So that's the key ingredient here. If they have 4 or more employees, then they are liable for unemployment insurance. The next bullet point, so non-resident aliens, if you have those visa workers here working in our are seasonal mountain towns, then you may be exempt from unemployment insurance for those individuals. If you are a church or a religious organization, so if you're like a religious school, even if you are a 501c3 with less than 4 employees or more than 4 employees, you would still be exempt. So only if you are a church or a religious organization. Certain insurance agents, and really this is kind of the commission sales folks, so I won't spend too much time on that, or if you're a child under 21 or the spouse of a sole proprietor business or partnership. So one of the bullet points that is not on here that I get asked a lot is, can an owner elect to be exempt? And the answer is pretty simple. If you're a C Corp or an S Corp, if you're an owner that's considered an employee of the entity, then no, you cannot exempt yourself from unemployment insurance. So I do get that question a lot, so I wanted to be sure to point that out. So again, some organizations can be exempt from unemployment insurance. So the big gray area of rates. So what I have up on here is each year the Colorado Department of Labor and Employment determines premium rates for employers based on a number of factors, including the amount of money already paid and unemployment benefits made from former employees. So we're actually going to walk through how they calculate that rate. And I have a snippet, the image up on here on the screen that's a little lighter than the black font is a rate notice. So the Colorado Department of Labor and Employment sends this rate notice each November to employers to alert them of their rate for the upcoming year. So we're actually looking at an actual rate notice that received for 2019. And so we're actually going to walk through this example of how they calculate and determine these rates. And a lot of people tend to like fax this right over to ASAP and not really look too closely at it, but this is really important information to determine and examine if your rate's going up and down and why that change is occurring. So looking at this, I'm actually going to walk through each of these items here. So in order for them to figure out your specific rate, they subtract the amount of charges for benefits they have paid. So that would be item 3, kind of right in the middle of the slide there. They're subtracting that from item 2. So my little red marks in this are minus, equal, divided that you see here. So again, we're going to take item 3 and subtract it from item 2. And this amount is called the excess, which is notated in item 4 there. So we're looking at 3,320.47. From there, they divide the excess by your average annual payroll. So in this sample here, we have an average payroll of 30,320. And that gives the percentage of excess. Kind of now we're moving to the second row here. And from there, from that 11, is when you kind of turn to the rate table that's typically on page 2. So I'm going to advance one slide just to show you that calculation. So you'd look at the table, you would find, okay, I'm plus 11, and therefore my 2019 tax rate is 0.0094. So going back, I know this gets into a little bit of math, but essentially this is taking into considerations the premiums that have been taken from your account and paid as benefits to those claiming those unemployment benefits. And so all of your history comes into play in how your rate is calculated. So I'm not going to talk about new businesses, because most of the people we have on this call today are established businesses, but new businesses have a new business rate. But essentially, your rate is based on your history. And then there's, in terms of unemployment insurance premiums, in terms of your rate that you pay for 2019, the limit on that is $13,100. So in this particular example, with $13,100 and the rate being 0.0094, you would pay no more than $123.14 per employee. So you only pay up to that threshold in a calendar year per employee. So hopefully that kind of gives a little bit of, you might pay closer attention to that rate notice next year. You might hang on to those rate notices so you can see how those change. A lot of people tend to kind of just scan that over to us and not really take time to review it. But this is real dollars here. And as we get into our presentation, we'll talk about how you can maintain those dollars and possibly reduce that liability for you. In terms of the limit too, and the $13,100, sometimes for small businesses, this might take multiple quarters, multiple months to reach that limit. And then essentially once you reach that limit, you're no longer paying into that unemployment pool for that employee. We talked a little about the rate chart. And in terms of rates, you know, let's talk a little bit about why and when they change, and that will kind of tee us up for Michael's presentation here. But before I kind of talk about the bullet points listed here, I do want to point out that the look back period for when they're looking back on previous years for the amount of claims filed is July 1st to June 30th of each year. So just an important footnote. But there's several reasons why a business might see a rate increase. But here I've kind of listed some of the common reasons. Some of that might be because your average annual payroll increased. So more employees, more payroll, more liability. Number two, the level of unemployment insurance trust fund decreased. And this is not something we can really have any influence on, as this is really determined at the state level by budget. And then third here is getting into today's presentation, and that's rates can change based on the unemployment claims filed against the organization and the benefits received for those claims. So for those dismissed employees, if you're paying out on those claims, that is going to affect your rate. If you fight those claims and you win, that might not affect your rate. So all big factors into when and why they change. Some other kind of basics that I'm not going to talk too much about today is audits and when and why we have audits. There's a lot of factors there, and I could probably spend a good 10 minutes on that, but I would like to turn our attention over to Michael Santo. And I'm really excited to introduce you to Michael Santo today, and I'd like to tell you a little bit about him. Before I do that, I actually want to unmute him and turn his video on so he can show you his face too, maybe why I'm introducing him. So Michael Santo is an employment law attorney of Bechtel Santo Severn. ASAP's had the pleasure of working with Michael for several years and specifically assisting our clients with wage and hour matters, as well as counseling on day-to-day employment issues. And this really includes advising employers on hiring, discipline, termination decisions, leave and disability issues, revising employee handbooks and policies. And I do want to also give highlight to one of his, I guess, trophies. But in 2014, Michael was lead counsel on the Colorado Supreme Court case ICAO versus SoftRock. And this case assisted employers by requiring the Department of Labor to more thoroughly analyze the independent contractor factors during a Department of Labor audit. So he's kind of a rock star.
Yeah, follows up on your comments about the audit earlier.
Yeah, exactly. So anyway, I am really excited to introduce Michael, and with that, I'll actually get his slides going here.
Good afternoon, everybody. Thank you, Diana and ASAP Accounting for asking me to speak on this. this is, I always tell people that one of probably the favorite part of my jobs is the unemployment issues. They are never a dull moment at unemployment is certainly a hallmark of it. But what we hear a lot of times from organizations is, why even try? I'm not going to win. It doesn't really matter. And in fact, as Diana pointed out, there can be some significant costs associated with unemployment. And frankly, the better you can do with unemployment, the lower you can keep those costs. But when in doing that, thinking about it from the standpoint of, as I identify in this first slide, it is basically mandatory insurance for unemployment, for unemployed workers. The example I always give is it is in essence, if you think about fire insurance for your home, and basically, unless you light your home on fire, you are going to get insurance if something happens with your home. And so, in essence, from an organizational standpoint, we have to show that an employee did something willfully, then that is what caused the separation, and that once we can establish that, then that improves our opportunities to be successful in unemployment. Well, one of the issues Diana mentioned during her talk, of course, was the seasonal worker. And we don't get a lot with this seasonal workers. And as I identify on that next slide, that organizations can request what's called a seasonal status. And that allows, normally when you're looking at a organization, or where most non-seasonal organizations, I should say, look at unemployment, if there is a layoff or an elimination of a position of an employee, generally that organization is going to not prevail at unemployment, because elimination of a position is not a willful act by the employee. And so for that reason, those eliminations, layoffs, those will generally be in employer's favor. That flips a little bit for the seasonal employer. But how first do you identify if you're a seasonal employer? Well, it is a business or occupation that works 26 or less weeks in a calendar year. And that is all workers in the occupation work less than 26 weeks. And they meet these conditions. There are at least 45 days in a row during which the workers do not work in a seasonal occupation, and no more than 25% of all workers in the occupation work outside the seasons, outside that season. So if you can establish that, if your business does not operate all year, if it works less than 26 weeks in a calendar year, and there are those separation of when workers do not work, and then no more than a certain number work outside, you can apply to the Colorado Department of Employment and Labor Unemployment for a seasonal work status. And then once that happens, when we flip back now to what's on the next slide, when we flip back, we were talking about how normally a private employer, a non-seasonal employer, that type of employer will be subject to pay unemployment benefits when it is the elimination of position. Per the Colorado Department of Labor, seasonal workers are not entitled to unemployment benefits if they are out of work because the seasonal ended. So that is different than the typical worker, which can be. Similarly, if they lose their job, and this is typical of all workers, not just seasonal workers, but if any worker loses their job, well, through no fault of their own, during the season, they may still be eligible for benefits. And we'll get into how workers can or cannot be eligible for those, but we're looking at through no fault of their own. So normally when you have a worker, as I said, you have a layoff and the employee loses their job, they're going to be entitled to benefits. If you're a seasonal employer, on the other hand, and their reason for their separation is the end of the season, they would not be. The Department of Labor actually has a number of nice examples in their materials, and that's what I've pulled up here in their examples. So, for example, if your ski resort, if you're working for a ski resort and the resort season is November 15th through April 15th, they meet all the other conditions. So less than 6 months, there are 45 days during which they do not work in a seasonal occupation and no more than 25%. So in this example, the ski resort, let's say, has received the designation of seasonal employer. In that situation, you have an employee who begins work on November 15th and ends work on April 15th. That employee would not be eligible for unemployment benefits because it is a seasonal employer and it ended at the time. On the other hand, let's say under this unfortunate circumstance of no snow, which certainly did not occur this year, yay. Let's say the employee is laid off on January 5th. That employee, because there's no snow, because the layoff, the separation was not because of the end of the season, but was caused by another matter, that employee could be eligible for unemployment benefits from January 15th until April 15th. It would, of course, cut off on April 15th, but that employee could be eligible for those benefits for that period because the time ended or the employment ended before the end of the season. Then you get to the next example, whereas the employee works after, let's say they're like this year, which frankly, we may have enough snow to last until the next year, which is always good news. They may no longer be considered a seasonal worker because they worked outside of the season. So if they lose their job at that point, they may be eligible for unemployment benefits. So something seasonal employers certainly want to keep in mind, excuse me, all choked up today, is the issue of when is the season ending? When did I establish my season for the Colorado Department of Labor? And how much of a benefit is there for me continuing beyond? Obviously, if you can get 20 days or in this example, 20 days of more skiers on the mountain, that may be worth it. But on the other hand, if you just simply say we're going from April 15th to April 16th, and that affects your seasonal status, that may not. So the final example they had is snow is heavier than expected this year, and the employer hires additional ski instructors on April 15th. Those instructors end employment on April 15th are not entitled to benefits if they work for less than 26 weeks. So those are the examples of the seasonal. So organizations who have a defined season can apply for that designation, and once they apply and receive that designation, they can then eliminate workers at the end of the season without suffering without the employee being considered qualified for benefits. Sorry.
Oh, no worries. I'll let you take a sip of water, but I just wanted to add to that note too before we close out on seasonal status, that you do have to apply every year for seasonal status.
Good point.
So, and if you need help or want to talk more about that, definitely contact ASAP, as we do have a lot of seasonal clients that have the seasonal status designation and can help you with that. So, cool. I will move on then.
Yeah. So the next issue we thought we talked about was just kind of how unemployment works. I find a lot of organizations that always ask me questions regarding the rules. What am I supposed to fill out? How does the hearing work? It's for the most part a very relaxed proceeding. So normally what would happen is an employee would fill out a claim for benefits. And then at that point, the division would issue the necessary documents that the employer has to fill out. Basically, do I have this here? If you do not complete the paperwork as requested by the identified deadline, the employee is generally going to receive benefits. One of the things that I hear all the time in employment, and it comes up at not necessarily, well, it just comes up when employees being separated. The employer is often asked, well, will you fight me on unemployment benefits? And will you contest, or will you fight my claim for unemployment benefits? And sometimes organizations will say, no, we won't. I always remind organizations to remember that there is a requirement under Colorado statutes that employers complete that form. When you're requested to complete the initial request for information, that is a Colorado state required form. There's actually a penalty that can be assessed if an employer fails to do that. So when employers, when we're counseling them on terminations, we'll often say, well, what if I don't agree not to contest it? And I always say, well, be careful with that, because you actually can be subject to a fine for failing to comply with that. So something to keep in mind as you're getting that request. There is certainly anyone who has received one of those requests has noticed, if you receive them quite frequently, as we work, the Department of Labor is the Division of Unemployment is certainly being more aggressive in asking for supplemental requests for information. In previous times, you would really, before emails, I would say that that organizations would submit their initial response to the request, and the decision would be made thereafter. Now the division is being very, very aggressive in asking follow-up questions. Sometimes that's in a phone call, sometimes that's in an email. Oftentimes, I find that they ask much more detailed questions than has come up before, certainly may even come up at a hearing. And what generally those are driven from is the employer will respond, and then the employee or the former employee will say, well, that's not true. There's this and that and this and that. And so oftentimes the deputies, and we'll talk about the titles in a second, often the deputies will just shoot those an email of exactly what the former employee said, and basically ask the employer, well, respond to this. Now, failure to respond to the initial request for information, the one I said was associated with a penalty, that if you fail to do that, will basically preclude you from appealing. There's ways, if you for some reason missed it, and there's ways to maybe reinstate that appeal. But for the most part, failing to respond to that first request will mean you can't appeal. Second request or supplemental request does not have that same preclusive effect. So if you respond to the initial request for information and are asked for follow-up questions and you don't respond to those, you still should be able to appeal. Whether to respond to those, I always try to, but I have to admit there are some times where I wonder if those same questions would be asked in a hearing, and because we're so frequently do the hearings, there's a strategy to that I'm going to here. Let's go to that next page, that next slide. The thing to keep track of as we're going through unemployment are the different levels of review that come up, and there are 5 levels of review. There is the initial deputy level, and that is the initial group that I just talked about that asked for the initial claims, and then we'll ask for subsequent claims. The hearing officer level, which is I find to be oftentimes a very good review for employers. I think, in my own personal opinion or in my experience, I think sometimes at the deputy level, a lot of employees or former employees will simply respond, provide information that either they wouldn't do if they knew someone was sitting right across the table for them, figurative table, since these are all handled now by telephone, sitting across the table, or there is a hearing officer who's going to be asking cross-examination questions. So generally those, and we'll talk about this in a little more detail, generally those hearings occur in an hour, and with the right amount of preparation, don't take much more than that beforehand. So I encourage organizations to, if they think, my oft-repeated statement is, deputies do a very good job. They deal with a number of claims, but I always say I don't let a deputy talk me out of a decision. So, for example, if we're working with an organization and we think that the individual should be disqualified from benefits, if the deputy says no, they're qualified for benefits, I will generally work with the organization on an appeal to the hearing officer, because that is a brand new hearing. It's not appealing so much the deputy's decision as it's getting a second opinion without having to overturn the deputy. It's a brand new decision. So I find a lot of employers who say you just can't win unemployment, and I always ask them, well, do you go to hearing? And they say, no, I'm just talking about the deputy. Well, yeah, that can certainly happen in that level of review. It's a very difficult level of review, I find, for employers. So if you're looking at the 5 levels of review, the deputy, the hearing officer, the industrial claims appeals office, we'll talk about that in a second. And then the 2 levels of review after that are the Colorado Court of Appeals and Colorado Supreme Court. As Diana mentioned, the Soft Rock claim, which was an audit under the unemployment statute, that case went all the way to the Colorado Supreme Court. So the Colorado Supreme Court will hear unemployment claims. Let's go walk through each of the levels. And so what we're going to do first is, how do you, I used to title this talk, How to Win Unemployment Benefits, or I would jokingly say, or how to lose gracefully. To improve success at this level, I find that organizations should do a number of things, and most of those start very early. Now, we'll talk to improve success. It's best to try to identify the reasons for termination under one of the statute, subsection of the statute. We'll talk about those in a sec, so we'll just keep that on hold. But a lot of times, I find that the key to unemployment and winning, particularly at this level, is things that happen before a separation. And that can often be employee handbooks, job descriptions, setting those guidelines, setting those expectations, performance expectations, can be so helpful to be successful at this level. An employee who is aware of the expectations of the position and then fails to complete those, that's where employers will do a whole lot better at unemployment. And so, particularly at the deputy level. So, we'll often get the question, well, we know it would help, it's not required, but we know it would help to do a written reprimand. And, we didn't do that when we terminated Alice, when we terminated John. There was no written reprimand. So I guess we can't win at unemployment. I always say, yeah, that's not true, because what you need to do to improve your chances to win unemployment is to terminate based on something that you've previously identified to the employee. So, for example, have you warned your employee who you're terminating for attendance issues in a written reprimand that their attendance is bad? Well, no, we never did that. But we do have an employee handbook policy that goes over attendance expectations with the employee. Great. The deputy levels, the hearing officer levels, they will look at those handbooks as, in essence, a warning. Well, we told the employee in their job description that they had to get their TPS reports in by Friday of every week, and Mike only got his in on Tuesday. He got them in 2 days late. We never warned him, but in his job description, it says TPS reports must be submitted on Friday. That is, in essence, a warning. So when you're asked in the deputy's request for information, has the employee been warned before? And you can point to a job description and point to an employer policy that it does count as a warning. So make sure you're addressing those as much as you can in handbook policies. Make sure you're identifying those job descriptions, assuming you have those in place, which is always a good idea. Also, of course, if you've done anything verbally, that's the time to also identify to the deputy that you have warned the employee before. The reason for the warning requirement is not so much that the unemployment says you have to have a warning, but more what we talked about at the beginning of this is you want to show that the employee willfully engage in the conduct that led to termination. And the way you can establish that they willfully engage in that conduct is to show that they were warned that that was a requirement, handbook, job description, whatnot, and that they failed to comply with that warning. So that's one of the reasons why we see that. So from that standpoint, as you're identifying for the deputy, you want to try to use the language we'll talk about in a second, and try to identify warnings whenever necessary. Now, certain conduct may not need warnings, but I try to warn employees in handbooks as much as possible with respect to what may lead to termination. If you decide to appeal the deputy's decision, your appeal has to be filed within 20 days. It's not 20 days after receipt, it's 20 days after mailing, so be careful that you document it correctly. I have down here, always appeal by facsimile. I say always, always, always appeal by facsimile. They get a ton of documentation in this division, and keeping track of it, it can be a nightmare. I couldn't even imagine. So I try to appeal by fax and then save my fax confirmation sheet. So if, for example, they come back and say, well, you didn't appeal in time, I've had a number of those situations where we've been told we didn't appeal in time, but if I can show the letter, the fax confirmation sheet, it is the easiest government agencies I've ever worked with to simply say, oh, you're right, got it, thanks a lot, you get your appeal rights. So from that standpoint, always fax, it's the easiest thing to have confirmation of, and then save those confirmations. Always state the basis for appeal. You don't have to cite a case or statute, but you should be as clear as possible, and we'll go over what some of those issues are. As I say here, appealing the deputy's decision, the statute specifically states we are required to state the specific reasons. I have seen that come up and bite some employers if they don't. Factors to consider, obviously the reason the organization terminated, I wouldn't appeal if we laid off an employee. I wouldn't recommend the organization appeal then because they're going to lose. But past unemployment success, a lot of supervisors will say, well, why are we trying so hard to win this? I mean, it's just insurance. What's the problem? Well, sure, but there are unemployment claims that are just simply impossible to win. An individual, or almost impossible to win, an individual is laid off, they're going to get unemployment. An individual is leaving the state because they're married to a person who has a job out of state. You're probably going to lose, as an employer, unemployment benefits there because it wasn't a willful separation by the employee. There's other health issues can be almost seemingly slam dunk winners. So there are going to be those you simply aren't going to be able to win. So that's why I always say it's good to look at the ones you can win in an attempt to lower your cost. The amount of the claimant's potential draw, obviously, if the claimant had been with you a short time and it's only $1,000 or $1,500, it's a low amount, that may not be a significant impact. But if you've had an employee with you for a long time, that would certainly be something to consider. The other thing is, and I say here, positive decision versus bad transcript. You've got to, nothing, borrow an expression from Las Vegas, everything that happens in unemployment stays in unemployment. You can't use a decision, an employee can't use a decision. It is evidence in no other proceeding because it has its own specific rules. everything is true. That is true with everything in unemployment except the transcript. So when you testify, you are testifying under oath. When your employee is testifying, or former employee, they are testifying under oath. So you want to be very careful thinking about, well, I got a supervisor who's really not good at testifying, and or maybe this employee's thinking of filing a charge. Maybe I can use this opportunity to almost depose the employee. So that is something that we take a look at. At that next level of review, which is the hearing officer level, it's really the only opportunity to present live testimony at the same time. So both parties will get to testify, both parties will take their turn, and then the hearing officer will make their decision from there. Whoever separated, so if an employee quit, they generally go first. If it's a termination, the employer would generally go first. Just something to be cognizant of when the hearing starts. If it's a quit, you do not, you as an employer wouldn't go first. That would be the employee. I actually find termination decisions are easier simply because then we can kind of set up the landscape in the hearing. When the employee goes first, we don't often know what they're going to say, why they quit, and so it can often be more difficult to prepare. The hearing officer will initially question the witness, and then the testifying parties will have their opportunity. After that, the hearing officer will then allow cross-examination, and that basically what happens is the hearing officer, let's say, will question you, then you can add in information, then the former employee can question you, and then the hearing officer can question you, and then you can add information, and it just keeps going around the circle until finally everyone says, well, I've asked all the questions that I had planned on asking. And then it completes to the next witness, and then finally it switches sides and completes that way too. But just a couple of thoughts, because a lot of this, as I said, or as you can see, is in the printed material, but a couple of thoughts to keep in mind. A lot of people like testifying over the phone, and of course now it's required. But I often hear, well, we like testifying over the phone because that way we can like motion, and we can, you know, if people are talking too much or something like that, or if they're forgetting a document, we can hand a document. When someone's testifying, they are testifying. It's not a group proceeding. And what I always tell people is to be cognizant of is you can hear nonverbal cues during the hearing, and they say, well, how can you hear something nonverbal? Well, you can't actually hear it. You can't hear waving of the hands, or you can't hear someone pointing to a document, but invariably people will testify differently. Like, for example, they'll be testifying, blah, 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 blah. Oh yeah, there's this document here. Okay, now the hearing officer and everyone pretty much knows someone just handed them a document. Or if they cut off in the middle, or if they suddenly add something in the middle and they switch. Most of us don't talk that way when we're testifying. We can finish our thoughts and then move on to the next thought. So be very careful. That can really hurt a credibility determination. Often these issues come down to who the hearing officer believes. And so for that reason, you want to be careful that you're not coaching the witness during testimony. And that can often comes up with nonverbal cues. And so just, you want to prep your witnesses. I always say, of course, tell the truth is the number one prep. But then the subsequent prep is answer the hearing officer's questions directly. That's not the time to pontificate, to brain dump. Hearing officer ask a question. Certain hearing officers in particular get very unhappy, those shall go unnamed, but get very unhappy if their question isn't responded to. That's not the time to add in your information. You just, as employer and employer's witnesses, you want to respond to the hearing officer's questions, and then you'll have a chance to add in additional testimony. Add in that stuff then. Add in the information, add in the documents. the time to do it is not when the hearing officer is generally not when the hearing officer is questioning, because they want you to answer their direct questions. You have to remember, hearing officers, as identified in the next or one of the slides, they're almost always scheduled for an hour, and oftentimes hearing officers will have 6, 7, 8 hearings a day. They have their way they like doing things, and I like to help them with that way. So I always encourage organizations and witnesses, help the hearing officer out. They got a lot to do. They have to hear all the decisions and then issue all the decisions. And it's like the mail. Those hearings keep coming. So help the hearing officers out by directly responding to their questions. When we talk about the hearing documents, if you're going to have any documents that you're going to present or want to present in addition, the time to send those in is right before the hearing. They have to be there at least a day beforehand. I usually try to be there 2 to 3 days beforehand. Make sure you send them both to the hearing officer and to the opposing party so everybody has a document. There is a new procedure in unemployment, and that is basically at this point, all documents come in as evidence. I'm not sure why the change. I will not explain my disappointment with that change, but I will simply say that is the change, and that is the procedure we have, and that is all documents come in. I find it still helpful to reference the document. So if I have a termination letter, don't assume that simply because it's in evidence, the hearing officer is going to read every document you submitted. So you'll want to, if there's a document that you think is particularly helpful, weave that into your testimony. Well, hearing officer, we terminated Mike on this date when we told him blah, 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 blah. And I gave him a termination letter. See document number, blah, blah, blah. The state a couple of years ago, just a little heads up, I don't know why, I actually jokingly like to say I like to take credit for it, because as telephone hearings became more the norm, we started labeling or numbering each of our documents, because in a telephone hearing, it's often hard to say, well, look at document that's labeled so-and-so. And if you've got 50 pages, that's hard to flip around to and to make sure you're all on the same page. So if you're going to submit documents, it's not a bad idea to put a number at the bottom of the document. Just write in. You don't have to, nothing fancy about it, just employer 001, employer 002. That way during the hearing, you can say to the hearing officer, well, as you see in the termination document, which is labeled employer 002, blah, 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 blah. You don't need to submit documents again. If they're in that hearing packet that you get right before the hearing, they only need to be in there once, but if there's not, it's a good time. That's a good time to add in additional documents. The hearing officer will always issue a written decision, generally within 7 to 10 days. You'll be receiving that. At that point, the hearing decision can be appealed to the Industrial Claims Appeals Office, and those have to be within 20 days. Those are a brief, written brief. There's no more new evidence coming in once the hearing concludes. So saying something to the hearing officer to the effect of, well, I can get you that document down the road. It either comes in at that hearing or it don't matter. So you'll want to make sure you're getting in all the documents you need. The Industrial Claims Appeals Office, when the briefs are written, it's too late to bring up new documents or new testimony. Affidavits can't be used. The chance was during the hearing. So you want to make sure you're getting everything in during the hearing. I've been doing unemployment hearings for almost 27 years now. I still will go into every hearing with a list of the X number of things I want to make sure we testify to and the X number of documents that I want to make sure we reference. And I will, as the hearing goes on, make little check marks next to each of those things to make sure I get them all in. So let's see, National Business Office, and then we move on to the Colorado Court of Appeals, Colorado Supreme Court. The Colorado Supreme Court does handle unemployment hearings. I've actually had one go to the Colorado Supreme Court on an issue, and so they will handle those. So improving your chances for winning, we start on the next slide. As I said, it starts even before the employee maybe starts on employment with the organization. It starts implementing policies, procedures, job descriptions. But you'll want to be wary of setting up, very specific policies. For example, as I mentioned, I think in the next slide, if your handbook states organizations will terminate an employee for 5 tardies, you'll definitely do really well if you terminate an employee always after the 5th tardy. But you'll have some problems terminating the employee or winning if you want to terminate the employee after 4 of them. So let's say the employee in their first week is late 4 times, but you have a policy that says 5 times before termination. You still can terminate. You may be able to terminate that employee under employment law, but under unemployment law, which is completely different. A lot of people, one thing to keep in mind is what unemployment decides is not what the rest of employment law may decide. Unemployment is based on a statute. The rest of employment law is based on the different laws that are at issue. So keep track that while defined policies may help in unemployment, they may not help in other areas of the law. I say written warning should always identify the applicable policy or job description that's being violated. Notify the employee that future discipline may lead to termination. At termination, you're required to provide the reason. I think it's a good idea to do it with a letter so we're all clear as to why the employer terminated the employee. Doesn't have to be a work of Shakespeare. Just, Mike, you were late 5 times on March 5th, March 9th, blah, blah, blah. And based on that, we are terminating your employment because policy 310, I'm just making this stuff up as I go along, policy 310 says we can terminate you for excessive absences. And we also warned you that you needed to be in on time on March 23rd. Again, just making things up. So that greatly helps your chances if you can do that. What I say here on the improving your possibility, the termination letter if possible, the next few slides, the next number of slides actually, is is a summary of those issues that the Colorado statute says are disqualifying reasons for termination. So if you can terminate an employee for one of these reasons and use this language in your responses at the deputy level, testimony to the hearing officer. So, it says, where's the one I always like to use? I think one of the later ones talks about, well, for example, instead of identifying you're a poor performer, Michael, there's a statute that says an employee can be disqualified from benefits for careless or shoddy work. Another one later says rude, insolent, harassing, or offensive behavior. So instead of saying, Michael, you're being a jerk or you're just a pain in the butt, I will use in reprimands and termination letters, and at the deputy level and at hearing, I'll use that language, rude, offensive. I don't use insolent, but rude and offensive conduct as the identification of the issue. So if you can, any of those, and the last one would be failure to meet job performance standards, any of those that go to an employee's reason for separation, it will help so much from an organization standpoint in improving your chances if you can hit on one of those reasons. It may be round peg, square hole, but from that standpoint, the more you can use that language, as many claims as the deputy see, as many claims as hearing officer see, if you can focus on that language as much as possible, it will improve your chances. Always go over witness testimony before the hearing. It's just it's a relaxed proceeding, but you'll want to know what people are going to say, and you'll want to you'll want to get their recollection of events. You're not, of course, trying to coach or attempting to induce. What you're simply doing is you want to know what they say, so when you're at the hearing, you know the witnesses what they're going to argue, or what they're going to say. Sorry, not argue. It's also better to decide before the hearing, often not during it, who you're going to use as witness. As I say in that slide, directly answer the hearing officer questions. Do not argue with the hearing officer. I can say 100% of the time in every case I've been involved in from an employer, I don't represent employees, but I've seen employees do it. Those who argue with the hearing officer never seem to do as well. So you're trying to provide them information is all you're doing. That's not the time to be. If a work rule is at issue, or you want to show that the employee received training, don't hesitate to send training materials. Don't hesitate to send work rules. That's fine. A lot of people will say, as this next point, well, this is hearsay, and I always say hearsay in these proceedings is often permitted. So don't worry too much about identifying something's hearsay. Just present your witnesses as credible as you can, and get the person as close to the incident as possible. Hearing officers hear a ton, as I said, a ton of hearings every day, anywhere from 5, I think, to up to 8. Generally 5 is the low. They're trying to learn your business in an hour and make a decision. So if you have technical terms, if you have things, you'll want to explain those to the hearing officer, what your business does. Sorry. As I said, keep a checklist of documents. We've talked about that. You don't need to fight every point. A lot of times this comes up and an employee quits, and most quits, the employee is going to be required to show that they were subjected to unreasonable working conditions that no one else would put up with. And a lot of times employers will say, well, I want to go over Bob, because that's who quit. I want to go over Bob's performance issues. Yeah, if they quit, that's not an issue. On the other hand, if you terminated them and the employee goes into, well, I didn't like the employer for this reason and that reason, there's really no reason for you to respond back to, well, no, we're a good place. It's a termination. You have to show in a termination that they willfully violated a rule, practice, procedure. Not that you're the world's greatest organization to work for, that it's a great place. So keep track of what you're focusing on. If it's a quit, that employee has to show that it's an unreasonable work conditions. So showing that the employee is also was a bad performer is not going to particular help. And you'll want to show fault, that the employee did something. Now, one thing to keep in mind on this is you got to be careful not to beat the employee up too much, so to speak. In these situations, an employer that testifies, Mike never did this correctly. Never's a tough one for unemployment, because then oftentimes those get blamed on the employer, or, well, maybe then you should have trained Mike better. So you'll want to show not only did Mike not do the duty you're at issue that caused Mike's separation, but also Mike had done that duty previously fine. He knew how to get TPS reports in on time. He knew that they were due on Friday, and he knew that they needed X, Y, and Z in there because, look, he had completed these TPS reports on Friday using these steps before. So make sure you're not just testifying the employees always messing up. Common mistakes I see, what we talked about, not warned in writing, or that it could lead to termination. So you'll definitely, in writing, maybe a handbook, a job description, those kind of things. Employer brings up things that were never discussed with the employee. They did so far in the past, well, 2 years ago, let me tell you what they did. Yeah, Generally, if it's not within about 6 to 9 months of termination, hearing officers tend to be, unless it's dead on point, tend to be like, well, you kind of kept them employed after that, so how serious could that have been? So you'll want to try to, really what I say is figure things in reverse. What was that last incident? What was that last event that the employee did? That the hearing officer is really going to focus on. If it's accumulation of things, of minor things, that last one can be tough if it's not something that is particularly egregious. So if it's not, and it's a long-standing issue, like, well, they were off in their bank reconciliation by $1.25. Well, that doesn't sound so bad, $1.25. Well, yeah, but they had been off by about that amount 23 days in a row. Okay, well, now that's an issue. So you can go back, but you know, if you can focus on one big event at the end, that certainly helps. You know, if you're going to testify that a bunch of reasons played the part in the decision, you're going to have to show that each of those would have led to termination. So for an extreme example, well, Mike punched somebody and that's why we let him go. But he was also 5 minutes late that day. Well, then the hearing officer is probably going to say, well, would the 5 minutes late have led to termination without the punching? So when you're identifying reasons, make sure all those reasons would have led to termination. Employer tries to rely on information they learned after. For example, it turned out they weren't completing all their TPS reports at all. We didn't know that till after they were terminated. Generally will not be successful. Take key witnesses. Number 6 is, we had talked about, if they're incapable of doing the job, that is probably going to be something that's not going to go your way. Employer becomes loud, irrational, or they give a reason that is unlawful. So those are kind of ways, the unemployment and those issues. Diana, were there any questions, or I can keep going?
That was a lot. It was good, and
okay.
we kind of blew through some of those slides with those language samples, but I'll have a copy of the slides, so yep. We can follow up with that after.
Yep, great. Well, and when Diana and I were putting this together, I said, you know, glad to go over unemployment. As I jokingly say, it is my favorite thing probably that I do. I really enjoy unemployment hearings. Frankly, they're the phrase I always refer to them as the last bastion of trial by shotgun. You have no idea what's going to happen at an unemployment hearing, and that can be kind of fun. You'll want to prepare, really spend the time not so much going over the same thing in your preparation, but trying to imagine, well, what's the employee going to say in response? What are we then going to say in response? One of the things I do during the hearing is when the employee's testifying, put the phone on mute and identify, okay, Mike just said this. Which of us is going to testify if there's a number of witnesses? Which of us is going to testify in response to that? Which of us has a counterpoint to this? Oftentimes, I won't do that on cross-examination because generally the former employee is going to disagree. Well, isn't it true that X, Y, and Z happened? Nope, didn't happen. So instead, sometimes I will do that, but I'll also be prepped with a witness who can then say, well, no, that's not true. Let me explain. So to have that counter witness, if it's a termination, you will get a chance. And if it's a quit, you'll get a chance as well. The hearing officers generally, before they end their hearing, will say, claimant, do you have anything to add? Employer, do you have anything to add? And so that's your time to, if you've got witnesses, if you have witnesses there who can bring in additional information, bring a counterpoint, that's the time to do it. So where I was going was when Diana and I were talking about putting in my last 10 minutes, when Diana and I were talking about putting this talk together, I said I can't miss, I wanted to take about 10 minutes to kind of give employers a heads up on some big issues that are happening at the Colorado legislature. Keep track of these moving forward. governor has to sign. I think it's by like May 13th or something like that, May 14th, 15th, somewhere in there, has to sign all bills. So the next 5 weeks are going to be very interesting in terms of Colorado passage of legislation. In particular, the Equal Pay for Equal Work Act, which is Senate Bill 19085. A couple of the main thing is that this is going to, this bill, the goal of it is certainly a great goal. We should have equal pay for equal work. In fact, we have a lot of legislation on that, but what this bill will do is it will greatly limit employer defenses to those claims. And so the way it is right now is that the only way we will be able as organizations to defend these claims in the future would be a bona fide seniority system. So a seniority system where you say your 5th year, here's what you'll get. Your 6th year, here's what you get. Those type of things. I'll skip to the 3rd one, the quality, a system that measures the quality or quantity, that should say production more than performance. It discusses production more than it does performance. So a system that says, if you produce an average of 100 widgets and they're of this quality, this is how you'll get paid. Don't know that many of us have such a system in place in terms of production. And then the 3rd way is a bona fide merit system, which unfortunately right now in the Colorado legislation is not defined exactly what they mean by that. Does that mean we're going to have to implement policies, procedures for merit system, that they'll all have to be determined, raises will all have to be determined based upon, performance scores, performance evaluations. So this will be very interesting. And for those of you, I've been telling people who are working on handbooks, you might as well wait until May 15th or mid-May to decide what you're going to do with your handbook, because frankly, we may see a dramatic shift in how handbooks have to be written in the next 5 weeks as a Colorado employer. It will, of course, prohibit retaliation who exercise their rights under the Act, which is true with most employment laws. It's going to require organizations to post positions internally and externally and identify the wage rate for those positions. So if you're hiring for a widget maker and you have to identify in your postings, which are both internal and external, this position pays $15 to $25 an hour. We're hiring for a supervisor and this position will pay $30,000 to $40,000 a year. That is going to be a requirement under the law for every position to identify a salary range. That repost position, which is the 3rd bullet point on that slide, that one actually looks like it may go away. So you can kind of scratch through that one. But again, it may come back because that was in the initial bill, but recent changes look like that one's going to go away. And it will prohibit organizations from seeking compensation history. The next bill really by far is the one I think a lot of organizations, and certainly we're keeping track of, which is the Colorado Family Medical Leave Bill, which is legislation referred to as the FAMLI bill. This is a bill that would provide for paid leave for all Colorado employees. And a lot of people will ask me, well, hold it, we're not covered by the Family Medical Leave Act. Did you mean us too? It will cover all Colorado employers with 1 or more employees. So every Colorado organization will be covered by this. And this law will require organizations to provide employees 12 weeks of paid leave for a serious health condition, their own serious health condition, for pregnancy leave, or for the serious health condition of their child, significant other, or parent. And there's also there's potential leave for individuals who are subject to domestic violence and stalking. So this is going to, if this passes, that it will mean that And you'll have to keep the position available for the employee. So when they come back after leave, that position will have to be there. You'll have, if you hire a replacement worker, that worker will have to be moved out, and the former employee, or not former employee, the previous employee will be moved back in. Where's the money coming from? A lot of people will say, like, well, here's the good / bad news of it, is that it is going to be paid for by both employees and employers. And in essence, what is going to be, it's going to be a mandatory deduction from everybody's paycheck. Last time I saw the numbers on this keep moving. There's a Senate hearing on Tuesday, and they may move again. But right now, if it's 1% of wages, it looks to be 0.6 of that from the employee, 0.4 of that from the employer, and how much that will cost. Some people will say, well, that's good. We're not bearing the entire burden of it. Well, it's good, but keep in mind, you now have a situation where an employee is paying for leave. And I would think most people who are paying for leave would want to use the leave they're paying for. So we may see a greater increase in use of this simply because employees are contributing to it, where it has not, family medical leave has certainly been used by a number of employees in the past. But I think that one of the issues with it is unpaid leave. With this being paid leave and paid at, frankly, last time I saw was something as a maximum of $1,000 a week. I think I'd have to go back and look. I don't remember the exact numbers, but it was a substantial amount. This is something that I think we'll see a lot of employees using the opportunity to take leave. So certainly keep track of this bill, Senate Bill 19-188. It is going to be the hot bill in the last 5 weeks of the legislative term. And if you're interested, there is a Senate hearing on Tuesday that we'll go over as well. So certainly something of interest. Even for small employers, we have 5 employees, and we're trying to figure out how we may have to deal with the 12 weeks of leave, paid leave for employees. So something to start looking. If it's implemented, the last iteration of the bill I saw said it would go into effect June of 2020. So we will have time, but that tends to come up rather quickly. So certainly something to keep track of. And then the final bill, which another bill I think is going to pass, is that the legislature the House in this situation is going to reduce organizations' abilities to access or to ask applicants to provide information about their conviction information or their past convictions. So as it says here, and I don't think many of us advertise that a person with a criminal history can apply, or that we do place statements in applications that someone may not apply. But I think that third bullet there, inquiring into or requiring a disclosure of an applicant's criminal history, happens fairly frequently. Most organizations ask for that information in the application, and this bill would prohibit that. The last talk I did on that, someone said, well, hold on a second. The next bullet says we're permitted to obtain a criminal history of an applicant at any time. Yeah, that's what it says. The legislature right now, the bill says you cannot ask an applicant the information, but you, employer, are allowed to go out and get information through a criminal background check under the Fair Credit Reporting Act, for example. You're allowed to get it. You're just not allowed to get it from the applicant. Kind of unusual provisions, I think, but I think that bill will pass in the next couple of weeks as well, as we see the legislative session wind down. So those are the bills. I want to make sure we go over those so you're all keeping track of that. We also, for those who are interested, do a newsletter, free newsletter, and we will be sending out emails as this legislation comes up. So if anyone's interested, you can certainly reach out to the firm and we will add you to our mailing list. So that's all. Dinah, you there? Dinah, did you fall asleep?
I'm here.
Okay.
I was gonna show your video again too, and I'm happy to show my video. And we can hang on for a few minutes if we did run a little bit over in terms of time, but that's okay. This is great information. But if anyone has any, bearing questions that have been bothering them the whole webinar, or any last minute thoughts here, you're welcome to type that into the Q&A and we can hang on for a minute here. All the attendees will get a copy of today's webinar recording, as well as I will send a copy of that slide deck as well for some of those slides with that language in there. So
I'm sorry if I went over. I had down 3:15, so I apologize.
No, you're fine. You're fine. This is great information.
You know, an Italian attorney, you give me a platform to talk. I'll just talk about.
Great. Well, it looks like no questions are coming in, so we'll go ahead and get back to opening day. So happy opening day. You didn't wear your jersey, but you threw on the collared shirt for us. Thank you.
I didn't. I have the jersey here. I was wearing it before the talk because it was wear your Rockies purple to work day at the firm.
Nice.
But I decided for the talk that I would actually put on more of an attorney attire.
Great. Well, thank you, Michael, so much. And thanks
you.
everyone for your participation today, and have a great weekend.